Hello, my name is Jake Shantz. I'm a senior at Appalachian State. Today, Gray Danford and I will be giving a presentation on Liberty Mutual. This is a picture of Liberty Mutual's first home office being built in 1937. Liberty Mutual began as a workers' compensation insurance company on July 1st, 1912. They're based out of Boston, Massachusetts. They wrote their first auto policy in 1918. They would expand their coverages to offer fire coverage, auto coverage, and liability coverage. And by 1936, they're the number one writer of workers' compensation. Liberty Mutual's always had a focus of safety and has invented several products for that purpose over the years. A few examples would be their stop switch for escalators, which they created in 1946. And by 1960, it'll be required by all escalators in the United States. Here's a picture or prototype for Liberty Mutual's safety car. They created this car in a partnership with Cornell University in 1957, the emphasis on highway safety. Liberty Mutual is also credited with inventing the first battery-powered prosthetic elbow in 1967. To give some more background about the company, I'm going to talk about their identity, which you can find on their website. Our belief: we believe progress happens when people feel secure. Our purpose: we exist to help people embrace today and confidently pursue tomorrow. Our promise: we promise protection for the unexpected, delivered with care. Here's Liberty Mutual's values, which you can also find on their website. Be open, engage with all people and possibilities. Keep it simple, be clear and transparent. Put people first, act with empathy, dignity, and respect. Make things better, be proactive, and challenge the status quo. And last but not least, act responsibly, do what's right, and follow through. Liberty Mutual today is a Fortune 100 company. They're ranked 78th in the country in 2023. They had $50 billion in revenue in 2022. They employ over 50,000 people in 29 different countries. The latest stock price was $18.83 per share. They have a current market cap of $8.822 billion. Here's a heat map of the risks that me and Gray will be going over today. The risks I'll be talking about are catastrophic events and economic collapse. For our first risk of the day, we're going to be talking about catastrophic events. And by catastrophic events, I'm mainly going to be talking about natural disasters, war, and terrorist attacks. First, I'm going to be talking about natural disasters. So, climate change is causing the world to become slightly warmer, and these warmer temperatures are causing glaciers to melt and sea levels to rise. These rising sea levels and warmer sea temperatures are resulting in more severe and more frequent hurricanes. Climate change is also playing a role in how floods, heat waves, droughts, and wildfires are also becoming more frequent and severe. And then, like I mentioned earlier, terrorism, war, other catastrophic events that could potentially happen. So Liberty Mutual is the sixth largest property and casualty insurer in the world. For example, these are the coverages they offer to individuals. We have home insurance, renters insurance, condo insurance, landlord insurance, mobile home insurance, and umbrella insurance plans. And then they also offer property and casualty insurance to businesses and organizations. So, for example, they have specialty property coverage, which is a limit of $25 million. And then for mid-sized businesses, they have a limit of $300 million. And then for large corporations and organizations, they have premier property coverage, which has a limit of $1 billion. Here's some examples of types of property that Liberty Mutual covers. We have amusement parks, service businesses, condos, apartments, financial institutions, healthcare facilities, hotels, motels, resorts, casinos, schools and institutions, office buildings, restaurants, retail and wholesale operations, and warehouses and manufacturing facilities. So Liberty Mutual covering thousands of properties around the world. I create a risk treatment plan in case of these catastrophic events. My first recommendation is a crisis management scenario where if a natural disaster or nuclear war or terrorism broke out, there would be a crisis management team that'd be trained for situations like this and that can offer relief to Liberty Mutual clients. Our second risk treatment plan is more risk transfer, which is just enrolling in more reinsurance so they're not liable so much as they are. Then I have diversification of locations. So if they're covering a lot of properties around the coastal area, a lot of properties in California where wildfires are pretty frequent, they can kind of diversify the area so they're not as liable for one natural disaster in one area. Fourth option is limiting property and casualty coverage for these large organizational buildings. These are the buildings I was talking about earlier that have, a $1 billion limit. If a bunch of these buildings went down at once, it would really hurt Liberty Mutual's financials. And my fifth recommendation is to reevaluate the war and terrorism coverage. We haven't had war, at least inside the United States recently, and then terrorism, it's just so unpredictable that I would just recommend reevaluating that coverage altogether. The second risk I'm going to be talking about today is economic collapse. And this scenario wouldn't affect just Liberty Mutual, but all companies in the United States. But just some facts here, inflation rates have skyrocketed in the United States. It's been as worse as the recent years as compared to the early 1980s. The Federal Reserve has raised federal funds rate 7 times in the year 2022 and continues to raise in 2023. We haven't seen a funds rate percentage this high since the 2008 housing crisis. The United States has also printed an estimated 80% of all US dollars that have ever existed since 2020, which is further devaluing the American dollar in this economy. It's also worth mentioning that the United States has over $31 trillion in debt that's mostly owed to Japan and China. Global superpowers China and Russia has also made an effort to limit the use of the US dollar and trade with their own currencies, which is further devaluing American currency. Trade operations between China and Russia with the US dollar fell from 90% to 46% in the first quarter of 2020 and seems to be going in that direction. If these and other economic powerhouses team up to ditch the US dollar, that could have extreme consequences for Liberty Mutual and all Americans. And here's a picture of China's president and Russia's president meeting in Moscow on March 23rd, 2023. All right, so here's my risk treatment plan for potential for economic collapse. Even though Liberty Mutual is not like a bank or anything like that, they focus on insurance. They do have $3 billion worth of revenue from investments in the 2022 year. So they are in the investment game and definitely deal with these financial assets. So my first recommendation is keep a healthy amount of physical cash. 90% of American currency is digital, and because of fraud, you're always running a risk of that money not being there. So holding on to physical cash is definitely something I would recommend. The second is avoid risky financial trends. We don't want another FTX situation. So I'd stay away from crypto, NFTs, and just tech startups in general. And number 3 and 4 are basically a plan. If you got to go one way or the other, they could try to hedge the currency as the American dollar is continuing to devalue. So maybe invest more in other countries' currencies, or they can go the other route and just only invest into American companies and just kind of ride the US dollar. And then 5th is diversification of portfolio. Obviously, don't invest everything in one place. It's better to have your assets spread out. And I'm going to pass the rest of the presentation to Gray.
Hey there, my name's Gray, and I'm working alongside with Jake on the Liberty Mutual presentation. And I'm going to begin with the SWOT analysis. And starting off with the strengths, Liberty Mutual has a strong distribution network, product innovation, and marketing strategies. Their opportunities include new customers from online channels and an economic uptick and increasing customer spending. And their weaknesses are an investment in research and development is low compared to the fastest growing players in the industry, and their limited success outside of their core business. And then their threats include growing strengths of local distributors and new environment regulations under the 2016 Paris Agreement. And so if you'll take a look at the heat map here, the risks that I'll be covering in my portion of the presentation includes litigation, regulation changes, and cyber. Now I'll begin with cyber. Cybercrime arrived back in the 1970s with the first computer virus named Creeper. And with the advancement in technology, these malicious attacks on computers have become a major threat. And that includes hacking, phishing, identity theft, and viruses. With today's society and the reliance on technology, the internet created new opportunities for cyber criminals all around the world. And according to Security Magazine, there are over 2,200 cyber attacks each day. And due to the sophistication of hackers' tactics, it is extremely difficult to bring them to justice. Only 0.05% of cyber criminals in the United States are detected and prosecuted. Although Liberty Mutual has not been a victim to a major data breach, the risk of it happening is present. And here you can see that from cyber, data breach, financial losses, damages to reputation, and disruption of operations could all be present under a cyber attack. And then the risk treatment for cyber could include taking the necessary security measures, such as making changes to the IT infrastructure. And you can update policies and procedures to conduct training and awareness programs for employees. And it would be nice to avoid, but in this case, that's not possible. Ensuring a portion of the risk is the best option. Moving on to regulation changes, the frequency of insurance regulation changes can vary depending on many factors. Government, policy, periodic review, and updates in response to economic and political environment. And the regulators may amend the rules regarding financial reporting, solvency requirements, etc. The NAIC is a private, nonprofit association of the chief insurance regulatory officials of the 50 states, DC, and 5 U.S. territories. It sees itself as a standard-setting organization, and when the NAIC adopts a model law or regulation, each state then determines whether to reject, modify, or adopt the model as written. Solvency regulation can encompass many aspects of Liberty Mutual's operations, such as capitalization, pricing of products, investments, reinsurance, reserves, asset liability matching, etc. If the government places tighter solvency standards, then the supply of insurance will drop and increase its price. If this occurs, Liberty Mutual could be at a competitive disadvantage if they cannot effectively adapt quickly. And on the other hand, loose solvency standards open the door for Liberty Mutual to offer a wide range of possible product and price options. The goal of regulation is to achieve an optimal balance between the insolvency costs and regulatory costs, but this is a difficult goal to obtain. And the risk treatment for this would include, with the uncertainty of the market, there are a few things that Liberty Mutual should do to stay ahead of the changes to remain compliant and competitive within the industry. This could include staying informed with the latest regulatory changes, building strong relationships with regulators, and develop compliance culture. Ensure that employees are understanding of the consequence of not following the current regulations. And then they should also perform a thorough analysis of their financial position and increase reserves to maintain optimal policyholder surplus to satisfy regulators. Overall, Liberty Mutual should retain this risk and act to the best of their ability to stay ahead of regulator requests. Next up is litigation. Insurance companies face litigation all the time, which can be costly as well as time-consuming. Typically, an insurance company is sued when they have shown bad faith and withheld critical information to their customers or failed to investigate a claim within a timely manner. Other lawsuits may be present when an insurance company denies a valid claim or if the policy provider offers the insured less money than what their claim was worth. Insurance companies such as Liberty Mutual understands that it's their duty to defend a claim under the terms of a policy and to pay judgment up to the limit of coverage. Beneficiaries, third parties, and policyholders have the right to file court action when their insurance company has failed to fulfill the contract. And the percentage of insurance claims brought to litigation rose 47% from 2017 to 2021, and although this may be largely attributed to the impact of COVID-19 with business interruption cases, that number can still increase over time with the adaptation of court hearings via Zoom, thus making it easier for the litigation process to develop. Risk treatment for litigation would include numerous ways for insurance companies to prevent litigation from occurring, such as thoroughly informing clients of their coverages and limits, explain what exclusions may be present in their policy, and create a transparent relationship with policyholders. In the case that Liberty Mutual is hit with a lawsuit, it is crucial for them to have allocated capital to pay for these events and to maintain a healthy liability insurance policy. And in conclusion, as we digest the previous information, there will always be uncertainty and risk that pose a threat to the longevity and success of Liberty Mutual. But understanding the risk present is the first step to continue providing exceptional service for clients and shareholders. And responding to the highlighted risk will ensure that this successful company will continue to sit on the S&P 500 list. Navigating through tough financial times by following a developed plan will ease the stress that clients and shareholders may have. We will be able to tell if our enterprise risk management plan is successful, if capital is used to efficiently prepare for these losses, and if Liberty Mutual faces any of the risk with the ability to continue operating and serving their clients. Thank you.